Good afternoon, and welcome to Growing Your Bank Through Fintech Sponsorship Revenue. An increasing number of financial institutions are evaluating their performance through the pandemic, looking for new opportunities to diversify their revenue. Fintech sponsorships have continued to gain interest among banks that have never considered this strategy before. Banks working through Fintech sponsorship programs can work with partners like Visa to create direct access to additional payments through their existing products. Today, we are joined by Visa to discuss the landscape, the opportunities, and where to begin as your institution evaluates fintech sponsorship opportunities. I'm Kia Haslett, Managing Editor at Bank Director. I write and edit our web content along with articles that appear in the magazine. My areas of focus include bank accounting policy, operations, strategies, and trends in mergers and acquisition. This webinar is brought to you by both Bank Director and Visa. An information resource to the financial community since 1991, Bank Director focuses on the strategic issues most fundamental to a bank's CEO, senior leadership team, chairman, and independent directors. Visa is the world's leader in digital payments. Visa's mission is to connect the world through the most innovative, reliable, and secure payment network, enabling individuals, businesses, and economies to thrive. Before we get started, let me share just a few things to keep in mind. First off, don't worry, we can't hear you. You have joined this webinar in listen-only mode. We recommend that you click on the slide bar at the bottom of the screen to adjust between the presenter and presentation. If you have questions for our speakers, please note them by clicking the Q&A button found on the right side of your screen. You can do this at any time during the presentation. Once our presenter has finished with their talking points, we'll have a Q&A period where those questions will be answered. There is no need to take detailed notes. The presentation will be shared with all attendees within 24 hours via email. It will also be available on bankdirector.com. If you have any technical issues, you may also note those using the moderator chat feature on the right-hand side of your screen, and we'll do our best to take care of it. Finally, the opinions expressed in this webinar are those of the individual speaker only and do not necessarily reflect the opinions of the other speakers or of the entities with which the speakers are associated. On that note, let me share a little bit about our speaker today. Brittany Decker is the Senior Account Executive, Head of BIN Sponsorships on the Digital Partnerships team for Visa in North America. She has more than 10 years of payments experience, including issuer processing, merchant acquiring, faster payments, and specializing in third-party fintech card issuance. Ms. Decker and her team are supporting a growing portfolio of BIN sponsor banks in the United States who support the vast majority of third-party fintech relationships, including but not limited to neobanks, banking-as-a-service partners, program managers, cryptocurrency, and buy now, pay later programs. So with that, Brittany, please take it away.
Okay, thank you so much, Kia, for that introduction. I'm really excited to be here. So good morning, good afternoon. Thank you to everyone who's joining today. We are going to be talking about growing your bank through financial options for fintech sponsorship revenue. So as mentioned, my name is Brittany Decker. I am at the head of BIN sponsorship here in North America for Visa. And I thought what would be helpful is for us to discuss the typical BIN sponsor profiles, why you might want to get into BIN sponsorship, what BIN sponsorship is really, and we'll touch on some economic models and trends that we're seeing in the market right now. So let's start with the basics. BIN sponsorship in the United States are always financial institutions and primarily their banks. These banks are partnering with third parties and helping them launch and operate their financial products and services into the market. The banks participating in sponsorship are interested in partnering with innovative companies and fintechs to meet consumers small businesses, commercial clients, where they all need us to be. The sponsor banks are leveraging these strategies because they're able to earn extra revenue for the bank. These banks are responsible for risk management, compliance with the network and federal regulations, and will be providing that settlement feature, that settlement functionality between the network on a daily basis. At Visa, we require our BIN sponsors to have a principal membership license with us, and they also are required to meet our credit settlement and risk requirements. If you're unfamiliar at all with what the credit settlement risk requirements are, I would encourage you to reach out to your Visa account executive to discuss those details, and then we would love to understand a little bit more about what your BIN sponsorship strategy is shaping up to look like or already is. BIN sponsors participate in issuing, merchant acquiring, Visa Direct, ATM acquiring, endpoint sponsorship, and a lot more. So let's look at this issuing example just to help us put some clarity around the typical players and the flow for an issuing transaction. On the left-hand side, you'll see the transaction is initiated via the Fintech product. Let's just say in this example, it's a neobank customer. The cardholder makes the purchase with their neobank card, and Visa will route the transaction over the network to the processor, the BIN sponsor bank, and the program manager for authorization. In this instance, we'll just say that the neobank is performing the program manager role and that they haven't hired somebody else to be able to perform that duty for them. So the neobank would take a look at the transaction and either approve or decline using the cooperative authorization options in the market. Depending on the type of issuing program and the various services that the BIN sponsor is providing to the fintech, there might also be a treasury bank as part of the ecosystem. So BIN sponsors are competing across many different dimensions. The scope of services is one of those items. So I just mentioned that the bank might be able to provide the treasury services for that third party or the fintech. They may or may not. So there's also opportunity for them to be able to leverage different products and services that partner individually might want to launch into the market. Maybe they're going to have a need for a credit product if they have debit today. They might be looking for someone to also sponsor them in for their OCT, the original credit transactions, or AFT transactions, account funding transactions, to Visa Direct as just another example. BIN sponsors are able to move quickly. And I would suggest having a clear direction internally at your bank to be able to achieve this. It'll help you realize revenue faster. You can weed out the different use cases and the various partners that come to you that may or may not be a fit for your bank. So having a clear yes and no, we do or don't support different types of programs will help you be able to move more nimbly, which is exactly what the fintechs are looking for. Expertise in risk management and in fraud, overseeing the program, how it's constructed, is it in compliance with the network and federal regulations, is a tremendous value that a bank is going to be able to bring to a third party. A lot of times these third parties do not have this level of expertise on staff, and they're looking to you for that consultative service. Pricing might also be an area where you're going to have some opportunity to compete. There's a lot of opportunities that have come from maybe a traditional commercial issuing bank that they're looking to be able to have more leverage, more hands-on approach in how they're running their entire program. And so being able to have access to more interchange, they might have more clarity around the fees for the networks than they would have at a traditional bank that might be servicing them today, and really looking for a BIN sponsor that gives them that opportunity also provides a tremendous amount of value. A typical BIN sponsor profile is going to include some of these here, if not all of them. So BIN sponsors are the ones that we're going to for early adoption. When Visa Direct came out, just as an example, or we talk about buy now, pay later, and some of the other use cases for crypto are also applicable. The first that are enabled to be able to get these products and services into the market are these BIN sponsor banks. Now, BIN sponsors in the US have traditionally kind of derived out of the community segment, and they're smaller and much more capable of being able to make decisions very quickly. They're also willing to be able to be flexible. And when I say flexible as an enabler, it's important that you have a strategy or just an approach and a point of view of what you're looking for in terms of how many processors, how many banking as a service partners would we be willing to connect when we're trying to get the business that's out in the market. It's inevitable that you're going to have a number of fintechs or a number of program managers that are going to come to you and say, we'd like to work with you, but we are not connected to a processor or banking as a service partner that you are already connected to today. Would you be willing to use this one? So having that ability to say yes, to be able to meet that partner where you need them is really vital for success. Achieving speed to market, we talked about that just a second ago. They're really looking for a yes or a no pretty quickly. So if you can say, bring it internal, have your team take a look, perform some due diligence on, what the program manager, what their fintech is looking like, and being able to say, you know what, this just isn't a fit, is what everyone sort of needs. Obviously, we need everything to get on the system, but for you to be able to concentrate your time on areas that you're going to be able to make the most revenue, and then allow those fintechs to go out and shop and see if there's a different bank that might fit their needs is super important. I put on here reliability, and one of the things that I wanted to touch on for a second is compliance. Not only is the bank really underscoring compliance on a number of levels, whether it be BSA, AML, but also compliance with the federal regulations, it's important that you have a strong grasp and hold over how these programs are performing and what's being launched into the market, so that when your assessor comes in and takes a look at the performance need in terms of your due diligence packages and say, this is how it's operating, and they can sign off on it and say, yep, you're doing a great job. And they're not going to have any questions and come back and have us make any changes. Additionally, Visa is rating all of our partners a bit. We just like you would take collateral from anybody that you'd be working with. You'd be looking at their financials. We're looking at the size of an institution and their ability to cover settlement for us. And part of that is looking at our tier one capital. So there might be some opportunities for us to talk a little bit about what your capital planning looks like, and do you have the suitable needs for various types of programs to be on the system without having to take additional collateral to support them. Being able to sponsor different products, having a solution architect, like what do you need to build from the bank to be able to service many? If you've got a direction that you say, hey, I'm really interested in where things are going with cryptocurrency, you may have to hire a team to build that product internally so that you can successfully launch something into the market. And then the last blue box here, sort of on the lower right-hand side, I put an investment in sponsorship. This can mean a lot of different things, but really as sort of an FTE support model is what I'm talking about here. The best fund sponsors in the ecosystem in the US today have a strong team of cross-functionally across the bank that are weighing in and taking a look at how all of the programs are performing and whether or not you want to say yes or no to a partner. Hiring an outbound sales team to be able to support, leveraging what do you want to be able to bring on and grow your bank in this area is super important. Having an implementation team that's able to quickly work with the programs and get them onto the system, providing account support on a day-to-day basis, compliance, again, from various levels, just to make sure that we're keeping your charter safe, and then having maybe developers on staff or having somebody that you'd be able to go to as a resource to do any development. And then product is certainly a really big piece that we're finding more and more banks are staffing up on to make sure that they have a compelling product in the market and they're able to differentiate themselves sometimes when these fintechs are shopping from various bank to bank. Now on the right-hand side, I put program management, and I put it in the orange box, but really I wanted to make it a differentiator. It's not super common that a bank is going to be performing program management. And so what do I mean by that? It's looking at, it's looking at the bank's, or the fintech rather's program on a day-to-day basis, monitoring pretty heavily on fraud, for example, and making authorization decisions and writing rules. You might be providing customer service support and a number of other things. Some banks that are in sponsorship do provide some level of program management. However, most do not. So we'll talk a little bit more about the roles and responsibilities. So this isn't an all-inclusive list, but sort of a high level. What do I mean when I'm talking about program manager? What do they really do? What does an issuer processor do? And the BIN sponsor's responsibilities. So first and foremost, ensuring compliance. We want to make sure everybody's safe, going to be around operating in a high capacity. And so making sure that if there are rules and regulations that we need to make sure are being fit, the bank is responsible to make sure all of that oversight is happening. Maintaining a network relationship. So we mentioned before that you have a license with us. It's going to be your principal license, and that you have all the oversight for Visa's products and services to maintain compliance, but also our Visa network rules. Having ownership over the cardholder, which means that you do need to be responsible to take the oversight, and sometimes there will be work for you on the KYC, AML, BSA perspective. So if Visa has any inquiries or something seems to spike, the first ones that we're going to go out to ask what's going on is going to be the bank, and you may need to bring in others down the stream, whether it's issuer processor, program manager, so on and so forth, as part of the conversation. We mentioned settlement and reconciliation, funds movement, and then I'll also say fees and interchange. Now this is important because you're our direct partner from the network perspective. All of our network fees and the interchange is going to flow through the bank, and it's up to you to determine how you're going to manage that and pass things along to the third parties. They're listed here, issuer processor and program manager, and there's some flexibility between all of these really in terms of what types of responsibilities on a granular level the BIN sponsor is going to make sure that oversight is getting taken care of. So an issuer processor is mainly maintaining cardholder accounts, being able to create those, authorizing transactions, making some decisions or suggestions about how to optimize those, being a system of record, for example, and providing some risk and fraud prevention services, and also chargeback processing. The program manager generally is going to be the ones that are hands-on from the day-to-day perspective of how the program is going to be operating. So this includes customer service, maybe cardholder acquisition, depending if the fintech is doing that themselves, or if the fintech is the program manager, then they would both be doing it. Establishing key relationships, providing risk and analytics tools, so on and so forth. The value-added service providers is sort of a newer segment that has come up in the last few years, where we have different value-added providers that are saying, hey, you may not have these products and services, say, for PCI compliance, and you need to be able to get access to tools and information where PCI data is transmitted. So someone could come in and sort of mask that for the program, for example, and provide a specific value-added level of service to how the program is operating. So why become a BIN sponsor? Primarily, it's to diversify your revenue. We saw during COVID that there was a whole different change in the economic status here in the States, obviously around the world. But in a world where we had the Fed at zero, deposits really didn't mean very much. We had commercial lending sort of at a different operating level. We saw a lot of loans that maybe didn't come through. There was some lost revenue that happened. And so primarily when I'm talking to new banks that are getting into just sort of feeling the waters out, what does sponsorship look like? What could this possibly mean for our bank? Primarily, the reason that they're looking at this is that they want to stay relevant. They don't necessarily want to have an acquisition or a merger down the road. And so they're looking at ways to continue to grow. And sponsorship is one of those areas. So you may not have a lot of oversight over how the program is being created, but you are being a key differentiator in being able to get those products into market, and your services deserve obviously a fee for that, and you can be able to gain revenue off those things. Being able to get revenue off the float is also an opportunity for you. Another reason a bank might get into BIN sponsorship is to engage in new segments. There are a number of fintechs that are really well focused after the underbanked potentially or unbanked that is just really generally untrusting of larger institutions. Maybe they do have a larger institution, but it's really not fitting their needs. So being able to expand into an area where there's a an opportunity to touch those that are in your community that may or may not really be trusting of an institution. Growing adjacent business lines. Not everything that you're going to be able to get out of these relationships has anything to do with Visa or another network. So being able to leverage different opportunities within the bank itself to be able to get fees and revenue and establish relationships, get really sticky with these guys is another reason you might want to get into sponsorship. There's a couple of models that have been pretty common. The first has been really led from the last couple of decades where the then sponsor bank is providing all of the network fees, all of the interchange, just giving 100% of it to pass through to the end third party. So it's their responsibility to pay all of that, and they're going to collect the revenue, obviously, as their interchange, and they're going to pay the bank for the various services that you're providing. Now, when the model didn't work so much when the Fed was at zero and deposits didn't mean a whole lot, so it moved to a little bit different model as a more popularity in the bundled servicing. So then sponsors are able to combine a lot of different services, provide more of a flat fee, and then tier it a little bit based off of performance. But they might also negotiate what interchange and float revenue would look like so that they're sharing that between the fintech and the bank. Now I'll caution and say, we don't play a part in how anybody fees. I don't get involved in anybody's fee structures and inform any of that. So this is information that was pulled from Mercator, who is a consulting agency that published a paper back in 2018. Addressing the risk is a place I just want to take a minute and just sort of highlight. Now, fraud is obviously a concern for everybody all the time. It is common that a fintech or a third party is going to take on the responsibility for any fraud that would potentially hit their issuing program, or if it's Visa Direct, so on and so forth. So having that pushed over to them obviously means that they need to have either really strong program management skills and fraud monitoring, and also have the bank potentially as a backup to be able to see if there's anything that's spiking and sort of bring things to the attention. So you'll typically pass on the financial responsibilities for anything that happens there. Additionally, we want to cover the risk for the bank in terms of being able to settle. So it's typical that a BIN sponsor is going to have I'll probably say 3 to 4 days is probably more likely, 3 to 4 days worth of collateral to be able to settle with the network. So if we have a long weekend, you have that on hand, and then you'll end up topping up sometimes on a daily basis. There might be other reasons for you to have collateral on hand, and it would probably be more led to being able to cover any of the fees that occur with standing up a program and operating it, cost of a BIN, cost of implementing a program, so on and so forth. So I'll move over to the key trends that we're seeing in the market for BIN sponsorship today. There's a number of larger BIN sponsors that are listed here, just to put some names to color this. It certainly doesn't cover everybody in the United States. We're seeing that the number of banks participating in sponsorship is doubling every year. So where I might have only had 10 or 15 banks a few years ago, now we're tracking for closer to 50 in the United States that are operating in this model. Additionally, fintechs are finding opportunities to buy smaller banks. So there was a trend for the fintechs to try to become a bank, but that seems to have petered out when they realized it's pretty difficult to get a charter. So instead, they might be looking at institutions, usually within the community segment, who are looking for an acquisition, and then they'll focus on BIN sponsorship moving forward. If you're getting into this space or you're already operating in it, then you're probably paying attention to what's happening with all of the regulations and work that's happening around cryptocurrency and USDC. Visa is very close to what we're doing in this market as well. I mean, we're active with our governing team to be able to make sure that Visa as the network is sort of playing a part in helping to educate our lawmakers and just staying abreast of what's happening in terms of the rules and regulations. Banking as a service enablers are growing by a lot. So pause again and just say banking as a service. I typically would say define them as a network, or I'm sorry, a processor light. So they might be an endpoint sitting on top of another processor to gateway into the VisaNet system, but they're typically coming in with program management skills and some sort of technology stack, whether it's a core or flexible core or digital offering that can plug in very easily to the fintech and or the bank. The number of those enablers is growing a great deal, and many BIN sponsors are looking to establish relationships with those so that they can achieve scale underneath them. Larger BIN sponsor banks typically offer a lot of different capabilities, so it's very common that once you get in and you sort of establish yourself in one product category or another, that you're going to find that you are going to get requests to add on different products and services down the road. And some of the most common ones have been merchant services and Visa Direct. So some bank trends that we're seeing additionally here is that commercial payments is growing. I used an example earlier to just talk about how we've seen some of the traditional commercial programs that have looked for more flexibility. They are looking for a lot of times one-time use credit card, virtual card. Sometimes they have plastic in market, but really they're wanting to have more options to diversify how they're making their revenue and having more flexibility over the types of partners that they end up choosing for themselves. For instance, if somebody is working in commercial payments, they might decide as a bank, hey, we're going to filter down from maybe having 2 processing partners down to 1, and that may or may not be something that a third party is really interested in. So if they'd rather keep their processor, they might be willing to go shop around to see if there's a different bank that can service them a little bit different. Merchant acquiring is a hot topic. A lot of these merchants that are coming, these fintechs that are coming in, also want to have control over the purchasing side, and we're seeing an influx of payfacs that are coming into this space. I would say that the primary driver here is, again, flexibility, being able to find a bank who's willing to maybe go outside of a traditional model that they would be having with a player that they've been working with before as an acquiring bank, and they're looking for speed to market and maybe looking at fringe use cases like cryptocurrency, for example. Visa Direct is a table stakes product for BIN sponsors. So many times once we get a consumer product in market, the next ask is really to be able to support cross-border and domestic OCTs depending on who the partner is. Growth outside of the US is continuing to happen. So you may have some requests of folks that are looking for experienced BIN sponsors that can support a program here, and then either provide some level of cross-border services like OCTs that is allowable. And then certainly they might ask you to sponsor them in other markets. That's going to be pretty difficult if we're not being able to get a charter in another region, but there might be certain circumstances like in prepaid where there would be some cross-border issuance that would be allowable. Cryptocurrency I've mentioned a couple times, in USDC. We're trying to stay ahead of the game here and really have a forward-focused point of view and being really innovative on how we're bringing those products to market. A lot of the times you're going to see a issuing product that is going to be able to convert cryptocurrency to fiat, and that's when the bank would get involved, and they would touch fiat currency on the card as well as Visa. We're also looking to try and get some different models into the USDC portion of this environment and potentially into settlement. I'm going to end on this slide before we get to questions and answers because I know that we've talked about a lot. I threw a ton of information at you. If you haven't heard some of this before, it might feel like you've heard really compelling reason why you should get into BIN sponsorship. There's a lot of activity here. Maybe you're already talking to fintechs, but it is important to just underscore the importance of risk management and your corporate governance considerations. So this slide, which will be available again as part of this recorded webinar, is something that we would like to just sort of say, like, here are some opportunities that you can, some options you can look at and really understand, are we covering all of these options? Are we really figuring out what our oversight looks like when it comes to customer onboarding? We are happy to support and lean in as much as we can from a network perspective as a partner to help you understand what is needed in order to be successful here. So we find this super helpful when I provide this as sort of a resource so you can take a quick glance and say, yep, we've got all of those things covered, or by the way, actually we need to do a little bit more work. There's some items on here that we haven't thought about before. So with that, I will ask that Kia join me back for the discussion here, and we'll see if there's any questions and answers, or questions to answer.
Well, thank you so much, Brittany. Banking as a service is a topic I've actually written about in the last year, so I know it's an area of a lot of interest and growth. I also want to encourage, again, any of our attendees to submit any questions they might have while Brittany's here with us today. Brittany, my first question for you is, what are some of the first steps that banks looking to get into BIN sponsorship should think about taking?
Thanks, Kia. Yeah, I would say the first thing that you want to do is have an internal sort of committee that is going to work with you, assign some people to figuring out what BIN sponsorship looks like and understanding what is going to drive your strategy. So we are certainly happy to lean in and sort of get some of that started, give you some items to think about. I would say engaging a network really early, like Visa, is super important because we do want to be collaborative partners and be able to give you some of those tools so that you're not just sort of bounding around and talking to a lot of different players and not getting a perspective of like what are the foundations for what you're going to need from an enablement perspective with the network. So we have different consulting services that are available as well. But certainly as partners with your account executive, if you don't have one, please reach out to me directly and we'll make sure that you get the help and the education that you need from our perspective to at least launch you a little bit further with some success.
Great. And can you talk a little bit more about the requirements for a bank to qualify for a BIN sponsorship with Visa?
Yeah, we've tried to make it pretty easy for you to be able to be enabled. Now, I said banks really are primarily the drivers, and I'll just say because really you have the reach across the United States with your charters to be able to support. So we're looking for you to be a principal member. If you're not, you're an associate member with us. We would need to upgrade you, and we can talk about some differences that you might see in terms of roles and responsibilities with working with us. And then we're really looking to take a look at our credit settlement risk team to see your profile and give you the heads up. So it's super important for us to be able to know what products and services you're interested in moving forward with your partners. If it's debit issuing, that's great. If it's merchant services, that might be a little bit different in terms of what our requirements are, because that's a higher risk, lower margin area of the business. Just being super communicative with us will be as transparent as possible. So please reach out and let us, have those conversations with you.
How long do these types of sponsorship programs typically take to come to fruition?
Ooh, really good question. Now, from a network perspective, by the time you engage us and we're doing the work, like the implementation work, we'll typically see like 45, 60 days to be able to get on the market. But everything that's going into that beforehand can take 6, 9, 12 months, depending on whether or not you have a relationship with this partner already. So let's just say that you've got a treasury bank service that you're providing to a third party, and they could be working with somebody else, or they got started with treasury services first because they have their VC money and they needed to get a bank to be able to hold all of that for you. Well, when they're ready to launch a product, they're going to give you their due diligence information. You're going to run that through your analysis, and your team's going to take a look and say, yes, we feel good about their financial levels and their ability to be around in a couple of years and what their funding looks like. And then you'll move to like pricing and developing a partnership relationship agreement. So that can take a little time. And I would say that the compliance piece of it is one of the longest poles because you want to make sure that you are saying yes to the right partners versus, running through and saying, feel good about these guys. We'll go ahead and say it. There's a lot of work that goes between that. So I would plan, 6, 9, 12 months, depending on the level of detail that you have on the partner.
I think that's a reasonable answer. What are the typical objectives of a BIN sponsorship program? Do banks use these programs for deposit acquisition, revenue, or customer acquisition?
Well, yeah, kind of yes to everything. So the customer acquisition, the last piece that was mentioned, I would say is you're going to acquire customers, but it's not going to be under your brand. So the fintech or the third party is going to be the leading brand on any of the products. That's who the consumer is going to know, or if it's a small business or commercial business owner that is leveraging these products is going to be familiar with and know who they're operating. There's all of those partners on the behind the scenes. So what I described really was the enablement of all of this versus like the cardholder facing sort of scenario. So while you may have the relationship with the cardholder, and you're going to have your issuing statement on the back of the cards, for example, they're primarily going to know the fintech on the other end. Yes, to deposits. So before COVID, deposits was a huge interest to be able to leverage for revenue opportunities, right? To have that ability to keep those balances on your books. So now that we're in a position where the Fed has raised the rates, it's become much more valuable these days. So I think I answered all of them. Did I miss one of the pieces of that question, Kia?
So it was revenue. Can you talk a little bit about how the revenue works? Is it just interchange?
Well, the interchange is typically flown through to the end party. So while you may be able to negotiate a piece of it, I would say the vast majority, sometimes all of it, is given to the third party because that's their source of revenue. So they may have fees that they are charging for their various products, depending on what it is. But we have seen that fee-based products in the market are not super common, especially with consumer debit. So probably a little unlikely that they're going to have anything there. So you're going to make revenue more on the products and services, and in your oversight, like you provide a tremendous amount of value to even get them into the ecosystem. And so you'll build a financial model to capture all of that expertise and make sure you're getting paid for all of that.
I actually just wrote a profile in our Ranking Banking project that came out of one of the sponsor banks that you mentioned, the Bancorp. And then I realized that I actually I have a bank account that is actually powered by the Bancorp, and I was like, man, they're everywhere, right? Like, I didn't open that account at Bancorp. The account that I work with opened it for me. So
yeah, exactly.
It was kind of funny, like a little meta moment there. I have another question for you. Could you give a deeper dive into those third-party audits from your perspective, and maybe from what it's like from the bank perspective?
Well, so I haven't worked at a bank, so I can only tell you from my perspective of working with banks.
Sure.
Yeah, I tried to touch on compliance a whole lot to say like this is super important. We want to like safeguard your charter and make sure that the bank is safe, because the worst thing that could happen is that the regulators come in and they go, oh my gosh, you're doing it wrong, and you're going to get some sort of action in order to get back into compliance, or heaven forbid there's actually like a cease and desist that happens. But I will tell you that cease and desist do happen in sponsorship world. I have a bank that probably goes under every year, and then they have to work their way out of it. So we don't want to get there. We want you to keep growing and safely and do it in a compliant way. So the audits are super important. I would say if you are thinking about sponsorship, like it's hard for me to say anything, but please reach out to your regulator and let them know what your strategy is so that they can be informed. You may, in some cases, be educating them a little bit on what your strategy is, but having that open dialogue can be helpful. I've heard various reasons why banks may not want to engage them, and I totally get it. So take my advice as it is appropriate for your particular engagement. I would say find a network also of banks that many of these fund sponsors that are in the market are very willing to talk to other banks. There is more business out there to be had. Not everything is being serviced today. We need more sponsors to enter, and they are very willing to tell you what it's like to get involved. And they don't want to underscore the work it takes to be able to enable it. It's not about just getting a BIN and standing up. It's about prepping your strategy and building BIN sponsorship internally so that you have the bricks and walls already built and you can start filling it with all your programs.
Yeah, and I think one thing that, from my perspective, banking as service, embedded finance, because the fintechs might want interchange revenue, community banks are exceptionally well positioned to be partners because they're under 10 billion in assets. So
Right.
I was really excited thinking about the opportunities that are available specifically for community banks.
That's right. The majority, I would say 99.9% of who would say they're a BIN sponsor bank is under 10 billion in assets
Yeah.
because they're a differentiator for obviously a lot of different reasons, but keeping your bank smaller and being able to move much faster than some of the very large ones is what the fintechs, the third parties, the program managers, all of the above are really looking for in a bank partner.
Well, Brittany, I don't have any more questions for you. Thank you so much for giving us this time today and sharing all this enlightening information with us. For our attendees, as a reminder, you will receive a recorded version of this webinar within 24 hours, and we'll also post it on Bank Director. So with that, thank you so much, Brittany Decker and Visa, for co-hosting today's webinar, and thank you for joining us today. Have a great day, everyone.